very good morning to our RANsquawk listeners. Welcome to the European Rundown for today, Wednesday the 9th of March. Just going through 9 o'clock now here in London, a quick check round the markets. And attention seems to have turned, at least for the time being, back to peripheral Europe rather than that of the Middle Eastern crisis. WTI crude at the moment is trading slight negative, albeit off its lowest levels, but still down around 50 cents, with no real further developments as yet in terms of the Libyan situation, where violence continues for the time being. In terms of peripheral Europe, though, we do have comments, of course, from S&P's Kramer late last night. He said that he does foresee further European sovereign downgrades. That coupled as well ahead of some jitters for a Portuguese bond sale 2013 maturities to come at 10 o'clock London time this morning. And with the persistent record highs we are now seeing in the cash 10-year bond yields in the likes of peripheral Europe, Italy just crossing above the 5% level the first time since 2008. That as well has compounded some of the fears, and we've seen widening the peripheral spreads, which has seen weight in the euro across the board, which has come under some selling pressure. That's pretty much the major thing to look out for, what has happened so far this morning. Looking forward though, in terms of economic data from the UK, we'll be looking out for the latest trade balance numbers. We'll also have industrial production from Germany. That will conclude the morning's economic data. And then in terms of US this afternoon, we'll have wholesale inventories and the oil prices, the DOE numbers, as well as a 10-year note sale from the Treasury as well to come. So that concludes the European opening wrap. We'll have another update at the cash equity close this afternoon. So for the time being, I wish you all a great trading day.